Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Global chip stocks stumble as investors question the longevity of the AI boom with concerns over debt and demand. Oil extends a sharp retreat after President Trump says Washington and Tehran are talking. Traders weigh lower escalation risks against continued uncertainty. And ADNOC subsidiary Fertiglobe joins us to discuss their second quarter earnings amid the geopolitical tensions. It has just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A lot to unpack on today's show. The geopolitics continue to happen in the region, but a lot is happening in markets as well this morning. So let's take a quick look at where things stand as of this morning. In the red for equities, S&P futures 0.1% lower. Now they were retreating a little bit more, but are pairing some of those losses from earlier in the session. We're seeing Asian equities really tumbling today, about 3% lower. No surprise there. The KOSPI in South Korea, a halt in trading earlier in the session. Now, this is all AI. This is all investors questioning the longevity of the AI game, especially ahead of earnings coming out of the United States when it comes to those four big Max 7 companies reporting over the next day or so. We're also taking a look at Brent prices, lower this morning, more than 1% at this point, below that $90 a barrel handle. And this is because President Trump said that a deal is possible with Iran. Now, let's just bear in mind that he said that multiple times over the course of this war. But yesterday, that news of him saying that a deal and possible talks with Iranian counterparts have brought down oil prices by the most in 3 months. So we're seeing 87 on the barrel for Brent crude prices. And then the yield on the 10-year notes in the United States, that is also dropping 2 basis points. We await that FOMC meeting on Wednesday and a hawkish tilt. We'll talk more on the show about that. But I also want to flip the board and take a look at a chart that we're taking a look at this morning by our markets teams and look at what it's titled, U.S. Semi-Volatility Stays Elevated. Now, this is multiple moving parts, and I want to start with ASML. It tumbled yesterday, bringing Nvidia down with it. And this is essentially because of a Chinese state-backed firm producing a certain chip-making machine that may threaten ASML sales. And so we're seeing the impact of that on ASML, but also on the volatility of that SOX gauge that tracks the hardware or the memory chips, essentially. So a fascinating chart there that we were taking a look at earlier this morning. But for a deeper look in what is happening in Asian markets this morning, we've got Avril Hong in our Singapore studio. Avril?
Yeah, beer. Asia stocks are tumbling today. We're seeing the region's benchmark at one point losing upwards of 3%, and the losses from the June peak so far almost nearing 10%, which is correction territory. Now, the KOSPI obviously is in the spotlight, not just as the poster child for AI, but the poster child for market volatility. At one point, tumbling 10.7%. The circuit breakers were rolled out a couple of times already today, and you're looking at if there were those losses upwards of 10% on the KOSPI, that would have left it at its worst session since the month of March. Now, there are 2 main drivers for the market's decline today. One, as you alluded to, the progress that China seems to be making in lithography manufacturing. The other element is the circular nature of financing, as we hear reporting that Nvidia could be getting these $750 billion worth in AI supply deals. That's really raising questions. How much of it is real demand? And as we see that, this is what you're seeing in the markets, the concerns among investors. I would also just highlight that when it comes to the progress that China's making on lithography, it could also mean that there is more capacity being created that could compress valuations. You're also seeing Chinese chip-making related stocks. They're coming under pressure today as well.
All right. Avril Hong in Singapore with the latest on those market details. Now, at the heart of all of this is really semiconductors, and they are the epicenter of the market sell-off today as risks compound. Rising levels of corporate leverage have pushed the cost of insuring Nvidia's debt higher after it announced fresh deals. Meanwhile, multiple tech advances out of China are threatening to rejig the global AI order across the value chain. A state-backed firm has reportedly begun producing machines that could rival ASML's dominance in the space. And on the memory side, we've got CXMT making a splash in its market debut. And finally, new Chinese AI models are being released to the public. So to discuss all of this, let's cross to Hong Kong, and our Asia equities reporter Winnie Su is there for us. Winnie, good to have you on. Can you just explain to us Nvidia's circular financing problem?
Yeah, good morning, Abir. Well, as Avril has just mentioned, we're talking about some $750 billion of commitment with Nvidia alongside some of these partners that they are working with. Now, this has actually been a problem since last year, but is becoming more of a problem now that we are seeing further concerns around these massive spending of the U.S. hyperscalers. Now, one example that we have heard recently is that collaboration with SK Group, which is to about $500 billion spent between the two companies. So that means SK Group is buying some of these supercomputers from Nvidia, while Nvidia actually buys some of these memory chips from SK Hynix. And the latest example is actually the commitment or the talks that they have with OpenAI, saying that they are potentially going to backstop as much as $250 billion for the company to lease the $500 billion worth of data center that SoftBank is now building in Ohio. And this is a bit of a more complicated situation because you have Nvidia spending that $250 billion on supporting the build out of data center of SoftBank. SoftBank is holding key stakes of OpenAI, and they're leasing that data center to OpenAI. OpenAI, a key customer of Nvidia, is in fact now going to buy further from Nvidia of these advanced chips. So you see how this kind of money circulating among these companies, and that is raising further concerns if the demand is inflated and if this is also causing further risk whenever there is a fallout in the AI boom.
All right, Winnie, with that update on everything that is happening in markets, Bloomberg's Asia equities reporter Winnie Su, thank you as always. Now, markets are also awaiting the Fed decision later this week, and Citadel expects Kevin Warsh to deliver a surprise hike. The firm's head of macro strategy says such a move would strengthen Warsh's credibility in the battle with inflation. A hike would also put an empathetic end on the forward guidance era. Interest rate swaps imply about a 40% chance of a quarter-point increase on Wednesday, which is an unusually high degree of uncertainty so close to a Fed decision. So joining us now to unpack all of this is Mehvish Ayub, Bank of Singapore's head of managed solutions advisory in Dubai. Mehvish, good to have you on this morning. Citadel predicting that Kevin Warsh would have actually a 25 basis point surprise hike in tomorrow's meeting. Do you think that the market is under predicting this hawkish tilt by the Federal Reserve?
Good morning, Abir, and thank you for having me on. So I think the key thing to note, there is certainly a lot of heightened sensitivity around what's happening in oil prices, inflation expectations, and that is essentially shifting this expectation potential for a rate hike coming this Wednesday. Our core view is actually the Fed is likely to stay on hold, but you can see actually with the limited forward guidance, the fact that it's Fed Chair Warsh's second meeting, the amount of dissent that we saw at the last meeting, why you've got this level of uncertainty. So I think the street will be calling either side, but I think the core thing to note is there is just this heightened sensitivity which could lead to a lot of volatility in rates going forward, and we've actually already seen that over the last week with the US 10-year hitting a high over the last 18 months of 4.7%.
And Mehvish, let's just move on to discuss what is happening in markets. I mean, it's all relevant at this point. And Avril, our colleague, was talking earlier about some gauges falling into correction territory. So when it comes to overall equities, do you think we're about to see signs of risk assets there heading into correction? Or are we starting to see something bigger, maybe signs of a bubble starting to burst?
Yeah, I do think the fundamentals of the AI trade and actually the earnings that we've seen so far year to date across the US and Europe indicate that essentially this is more likely to be a correction. But I think the key thing to note is, when I look at sort of the headline news, is despite oil being lower and despite there being a respite from the US-Iran war, you are having stocks much lower. It seems to be much more concentrated in the tech space for now, but I think there are multiple drivers as to what's happening in markets. Tech, I think, is very specifically associated with the competition risk that you're seeing from China, and the fact that that trade was actually a little bit overdone to the top side.
So I was also taking a look at your notes from earlier, and you prefer low volatility stocks, so that kind of takes out tech and what we're seeing there. So do you think that now a rotation into good old financials is going to start happening, for example?
Yeah, it's a really good point. And again, just coming back to portfolio construction and how we think about multi-asset portfolios at Bank of Singapore. So if we think about sort of the hedges that you would traditionally have in a portfolio, as I mentioned earlier, you've got heightened rates volatility, and gold hasn't performed either. So then we're thinking about how do you get diversification in the portfolio. And outside of alternatives, one of the key areas is really having that diversification within your equity bucket. So low volatility stocks, quality stocks, which tend to have a low beta to the market, can actually add very valuable diversification. There's some very interesting statistics, actually, a Bloomberg article about the dispersion of returns that you're seeing within sectors in the S&P. So the S&P and the VIX itself is not showing much movement, but there is incredible dispersion within the sectors. So for now, you are seeing very low correlation amongst those sectors, and you're seeing that rotation into more defensive sectors.
And Mehvish, I want to also discuss something that gets brought up every now and then this year, but potentially has the risk to upend markets, and that is private credit. Now, we've seen, again, signs of the risks looming there since the beginning of the year. But when it comes to the sector just generally, do you think that we could see bigger risks emerging over the next, let's say, 6 to 12 months?
So I think there are a couple of important factors here. One is really you're really got to call essentially a global recession and a systemic sort of risk event for you to be impacting a broad asset class like private credit. Structurally, the demand remains for that asset class, but I think the really important thing to note is there's a lot of negative sentiment and headline risk. When you translate it into the fundamentals of the core managers out there and the portfolios that they have, they are still fundamentally very sound. So in terms of what we have on our platform, it remains. And the important thing to note is that these are illiquid assets. They've always been sold as illiquid assets, so it's important to sort of weather the storm a bit. If you look at the volatility of the asset class, it's still very low. It's still attractive, and that broad private market space, not just private credit, infrastructure, private equity, still has very valuable diversification benefits in the context of a multi-asset portfolio.
All right, Mehvish, we're going to have to leave it there with your last thoughts on private credit. Mehvish Ayub, Bank of Singapore's head of Managed Solutions Advisory in Dubai. Now, coming up, oil extends its declines as traders renew optimism on talks between the U.S. and Iran. We'll unpack the latest there next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Oil has extended its steep decline after President Trump said the U.S. and Iran were in talks to try and end the Middle East conflict, with both sides continuing to hold off attacks. Brent is dipping to $87 a barrel, while WTI is approaching the $80 handle.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
Negotiators from Iran and Oman are also trying to reach a deal to restart shipping through the Strait of Hormuz. And President Trump is scheduled to meet Israeli Prime Minister Benjamin Netanyahu later today. So to unpack everything that's happening in the region, I'm now joined by Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia, and Bloomberg's Jerusalem-based reporter Dan Williams, who is in Washington, D.C. for Netanyahu's visit today. Stuart, I want to start with you and the latest in the region. This back and forth, we saw attacks. They stopped on Friday from the U.S. side. President Trump yesterday saying that we might see a breakthrough, in fact. But meanwhile, traffic in the Strait of Hormuz is still pretty much paralyzed. Can you walk us through what the latest is?
Yeah, so we've sort of, in some respects, gone back to the pre-war situation where the fight has sort of devolved into ones between Iran's proxies and Gulf members. So thinking particularly about the Houthis, we apparently had some incoming from what may be the militias, the sort of the pro-Iranian militias in southern Iraq yesterday, again into Saudi Arabia. But beyond that, yeah, I mean, it's not just Hormuz that's, virtually stopped. You've also got severe problems now on the other side of the peninsula around the Bab el-Mandeb straight up into the Red Sea. So from the perspective of the global oil markets, it's not like there's a sudden rush of oil onto the market, which is when you look at the price today, you think there's something of a disconnect there between what's actually happening on the ground and what's happening in terms of the price. But those comments from Trump, again, you need caution around them because it's not like it's the first time he's said that. But on the other hand, they have stopped firing at each other directly, at least, and there has to be some hope that you can get some sort of negotiations going again.
And Dan, just crossing over to you and where you are, there's an expectation of the Prime Minister visiting the U.S. to meet with President Trump later today. He said that he'll ask him to keep a constant watch on the nuclear program, and we'll discuss Iran generally. What other expectations are you looking at when it comes to Prime Minister Netanyahu's visit?
Well, it's a low-key visit so far. That's formally because Netanyahu's main reason, to judge by his statements and statements around his visit, is to pay respects to the late U.S. Senator Lindsey Graham. There's a memorial service Tuesday in Washington ahead of his burial. That'll be attended by Netanyahu as well as by Trump. And beforehand, they're expected to meet at the White House, potentially without reporters' presence. This is the fifth, the 5-month mark of this war, exactly 5 months since the Allies launched it. I doubt either of them would have wanted to reach this point with the war ongoing. Not necessarily a happy meeting, though it is their 8th meeting during Trump's current term, so something of a record in terms of a foreign dignitary getting that kind of audience. I imagine Netanyahu will be seeking to close ranks with Trump on what the future holds for the Iran campaigns, as well as what Stuart alluded to, which is downstream or second-tier effects of this war, proxy wars and the like, and individual powers in the region perhaps sensing a shifting in the regional order given the changing fortunes of the U.S. position in the region, and trying to make their own deals with Trump, not always with the approval or to the satisfaction of the Israelis. I'm referring specifically to Turkey and to Saudi Arabia.
All right, Dan, thank you. As always, Bloomberg's Dan Williams and Stuart Livingstone-Wallace, thank you both for your time. Now, still ahead this hour, we'll discuss the outlook for the oil markets with Rystad Energy's Jorge León. That is coming up in about 20 minutes or so stay tuned. This is Bloomberg. Welcome back to Horizons Middle East and Africa. In the United States, flights have been grounded due to storms and extreme heat. More than 165 million people across the Midwest and East Coast were under a heat warning, according to the National Weather Service. The heat wave is expected to shift westwards, sending temperatures across California soaring. Meanwhile, wildfires in France and Spain have stabilized, but Europe is preparing for a fourth heat wave. Authorities in Spain and France say there have been no significant flare-ups overnight, but the blazes are yet to be contained. Climate change is intensifying periods of extreme heat in Europe. And China says the United States has capped replacement tariffs on Chinese goods at 20%, revealing details of recent trade talks for the first time. A Commerce Ministry statement notes the current replacement tariff stands at 12.5%, giving Washington room to raise duties further before hitting that ceiling. China also says its own trade countermeasures remain in place, urging the U.S. to roll back unilateral tariffs. Now, before we head into the break, let's take a quick look at where equities are sitting this morning. We're looking at S&P futures 0.2% lower at this point. Now, the S&P 500 did close flat for a second straight session yesterday. Investors are clearly not yet ready to brush aside concerns over the artificial intelligence sector. We're keeping an eye on individual names, namely Nvidia. We saw the 5-year CDSs surging by the most on record after reports that it's in talks for more than $750 billion of AI infrastructure deals. So we're also keeping an eye on CapEx there and those companies that are reporting over the next couple of days. Nasdaq 100 futures dropping 0.7, Dow futures pretty much flat, and Euro Stoxx 50 futures unchanged completely. Now we move over to the oil story and what Brent crude prices are doing this morning. 3 sessions of declines extended today, $87.3 on the barrel for Brent crude. Now this is the de-escalation that we're seeing between the United States and Iran. President Trump saying that a deal is possible, yet another breakthrough. We're bearing in mind that he said that multiple times over the past 5 months or so. But Brent crude and NY crude are also dropping this morning because of that de-escalation. But coming up, we'll discuss with ADNOC, an ADNOC subsidiary called Fertiglobe is joining us to discuss second quarter earnings amid geopolitical tensions. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Global chip stocks tumble as investors question the longevity of the AI boom with concerns over debt and demand. Oil extends a sharp retreat after President Trump says Washington and Tehran are talking. Traders weigh lower escalation risks against continued uncertainty. And ADNOC subsidiary Fertiglobe joins us to discuss their second quarter earnings amid the geopolitical tensions. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Still a lot to get through for the rest of the show, but before we do that, a quick look at where equity benchmarks are sitting this morning. S&P futures still lower, 0.3% lower. We're keeping an eye on AI. We're keeping an eye on the tech boom and everything that is happening there, whether the market is set for a correction or something a little bit bigger. We're keeping an eye on the earnings that are coming out by 4 of the Max 7 companies over the course of the week, and what investors are looking at is more than just profit beats. We're looking at what CapEx looks like and whether the money that is spent is justifying those valuations in the market. Asian equities tumbling more and more by the second, 3.2% lower. We're seeing a red across the screen when it comes to all the major benchmarks in Asia. We'll have a little bit more of a deeper dive into that in a second. 2%. But Brent crude prices $87 on the barrel, 1.2% lower this morning. De-escalation in the Middle East, that is the name of the game there. And then the yield on the 10-year notes in the United States, 4.63%. 2 basis points lower. FOMC meeting tomorrow. Kevin Warsh, what does he decide to do? A hawkish tilt. That is what Citadel thinks. We'll probably see a 25 basis point hike. That is according to them. But we'll have to wait and see what that means for markets tomorrow. Now, for a flip of the board, we're taking a look at a chart today that is quite interesting, and that is essentially Chinese innovation that is keeping the SOX gauge of volatility quite high. So look at what is plugged there. And I want to focus on one name, and that is the Dutch company ASML. Yesterday, it sank to the lowest since early June on a report that a Chinese state-backed firm is producing certain chip-making machines that may threaten its sales. So it dragged Nvidia down with it in the U.S. hours. Now, look, the most successful aspect of U.S. technology curbs on China has been banning ASML from exporting its lithography machines to China. But that seems to be at risk. So we're taking a look at the volatility, the VIX index versus SOX gauge. But for a deeper dive in on the moves of Asia this morning, we've got Avril Hong again in our Singapore studio. Avril, what do you have for us?
Well, it's looking bad on the Asia-Pacific benchmark. You're looking at the MSCI AP that is down 10% roughly. That is correction territory. And today, I think one analyst put it best, the greed has turned into fear for AI investors. The year's biggest winners for AI have turned into the biggest losers. You look at the KOSPI and how this is headed for the worst session since March. The drag is coming from the chip makers, so SK, Samsung declining upwards of 13%. And the twofold concerns, not just about the extent in which Chinese players are making progress on lithography manufacturing, but also the circular nature of AI investments against the backdrop of the reporting from Nvidia and how there could be $750 billion worth of AI supply deals. Now, with that in mind, and the selling you're seeing in the tech stocks across the region, we are seeing the lithography makers in China, some of them up 20%. That's very interesting. But keep in mind also that within China, these progress could actually mean more capacity being created that could compress valuation. So you're also seeing a bit of a double-edged sword in the form of these Chinese chip makers coming under a lot of pressure in trade today. Abir?
All right, Avril Hong in Singapore, keeping an eye on those massive downward moves for us. Now let's move on to a regional story. Fertiglobe has reported second quarter adjusted net profits of $145 million with revenue of 1.1 or nearly $1.1 billion, beating estimates of 934.6 million. The fertilizer arm of ADNOC posted the results amid tensions in the Strait of Hormuz, which has had an impact on oil and fertilizers transport. So joining us now to discuss all of this is Ahmed El-Hoshy, CEO of Fertiglobe. Ahmed, I want to start with a simple one, perhaps. The earnings just came out about 15 minutes or so ago. Can you walk us through what we're seeing there?
Sure. Thanks for having me, Ayub. So yeah, we announced the earnings of adjusted EBITDA of $371 million, which is basically a doubling of Q2 of last year. Adjusted net profit of $145 million, which is about a 12x. And the key driver here has been kind of the increase in prices that we've seen in with the geopolitical tensions in the Middle East. About 30% of global urea, which is our main part that we produce, comes out of the Strait of Hormuz. So we saw a tightening of markets and a rally in pricing into April. It cooled off into June, but the team was able to work well to capitalize on it and be able to get product out of Abu Dhabi, but also from our North African plants in Egypt and Algeria, delivering them to global customers. So price has been a main driver, but our ability to continue to produce and move volumes out during this difficult period has helped achieve these results.
Now, Ahmed, just not to ignore the elephant in the room, and that is the geopolitical situation in the region and the shipping routes and the damages we're seeing there. How much of an impact do you forecast for that to have over the next couple of quarters or so, especially with now the Red Sea also coming under attack? And would that, do you think, offset the increase in prices that you were just alluding to?
So what we saw actually was pricing, kind of to talk about, the tail of pricing. Right before the war, late February, pricing was around $500. It hit $950 for urea in April, and it crashed back down in June to the low to mid 400s. And the driver behind that is that the North American and European seasons had ended. So demand had come down, and the market kind of found its footing in early June. Now, what we've seen in July is a rally in corn and wheat prices driven by the geopolitical tensions, El Nino weather patterns, concerns on crop yields, which has pushed pricing back up. And we've seen pricing now rally 30% to around $550 a ton in July. And we've also seen elevated gas prices globally. Now, gas is a major input for a lot of the producers globally, particularly sitting in Europe. So all of those have kind of created a bit of a floor on the price. In terms of the movement of product, it's been a bit start-stop. So a lot of product left the Strait of Hormuz in June. With the rise in tensions the last couple of weeks, we've seen that come almost to a halt. So we're going to see what happens here in the negotiations and tensions in the region to see how much actually is able to get out over the next several months.
And that's on the Strait of Hormuz, but your Algerian and Egyptian exports go through the Red Sea, and that is now, again, this is very fresh, so I don't suspect that it would have a marked impact yet or would translate into the numbers, but that is the case. So do you predict that to be a risk going forward for you?
So in general, it is a risk in terms of going from east to west and west to east through Bab el-Mandeb in the Red Sea is going to be a challenge. Where we sit, we're a little bit in a unique position where in Egypt, we are able to export fully from the Mediterranean Sea, and we sit at the mouth of the Suez Canal, far north of Bab el-Mandeb. So it just would have us go, north from Egypt rather than east from Egypt generally. And, we've been able to capitalize on some of these changes in trade patterns and trade flows, but it does create an issue for getting product, through the Suez Canal in general. We just happen to sit on either side of it with our production in eastern Egypt, just south of the Suez Canal. And in Algeria, we're completely kind of unaffected, sitting, 1 day sailing away from Europe.
Ahmed, just finally on geographies and with this dampening demand that we're seeing, especially out of China, are you looking to further double down on geographies in the West, namely in Europe?
So, we're constantly looking for growth opportunities. We did announce, that our guidance that our dividend is going to grow by over 20% at least, where we've said at least $150 million for dividends for the first half of this year. We're going to finalize that in September. But we constantly do look for growth opportunities. We've expanded into Australia on the distribution side last year with an acquisition. We're continuing to have storage capabilities into Europe. And we're going to continue to look at the markets where we have, low feedstock costs and attractive valuations, potentially grow the business in the future. In addition to the organic growth we have, where we have a 1 million ton ammonia plant under construction in the UAE that should complete in the second half of next year.
All right, Ahmed, we're going to have to leave it there. Ahmed El-Hoshy, CEO of Fertiglobe, thank you for your time this morning. Now, coming up, oil prices retreat on hopes a pause in tit-for-tat strikes and fresh negotiations could lead to the Strait of Hormuz reopening. We'll speak with Rystad Energy's Jorge León for his take next. This is Bloomberg. Oil prices continue to slide this morning, with Brent falling the most in more than 3 months. Markets are responding to an extended pause in daily strikes by the United States against Iran as negotiators from Tehran and Oman try to reach an agreement to restart shipping through the Strait of Hormuz. Joining us now is Jorge León, Geopolitical Analysis Head at Rystad Energy. Jorge, good to have you on this morning. Thank you for joining. Oil prices below around $90 on the barrel now, a massive deceleration over the past 3 days or so since the U.S. stopped attacking Iran late on Friday. But realistically, if this were to go on into a more protracted fighting, this back and forth, these escalations every now and then, what is the upside on Brent crude prices?
Abir, good morning. Thank you. Thank you for having me. That is the big question, right? I mean, we don't know what is going on. Military tensions have increased in the last few weeks, couple of weeks. Now there seems to be a pause, and therefore prices have retreated. But it really depends on what happens from now on. And we've done a lot of scenario analysis in the last few days, and there is the extreme scenario where fighting continues, where traffic through the Strait of Hormuz remain halted, where attacks on Bab el-Mandeb continue. If that happens, the extreme scenario says that oil prices could reach $150 per barrel. Now, it looks like in the last few hours that the diplomatic channel is reopened, that the hopes of a new deal are still there, and that's why prices have come down. In the very optimistic scenario where there is a deal tomorrow, let's say, prices should come down to around $75 per barrel. So the market is trying to understand, where are we? Are we in the escalation phase, or are we really looking at that de-escalation outlook going forward?
Okay, so 75 and 150, best and worst case scenarios. But this time around is quite different, right? Because it's not just the Strait of Hormuz. We're also seeing Bab el-Mandeb. We're seeing the Red Sea, which is the alternative route that Saudi has been using in the midst of all of this under attack. We're also seeing action in Russia. And so we're seeing multiple attacks happening, and that makes it a different time around from what was happening in March. So what are the implications of those different fronts being open?
For sure, that is the key issue here. I think back in March, back in April, we reached $120 per barrel. Now, this time around, as I mentioned, we could reach, in the worst case scenario, $150 per barrel. And there are three important elements that explain why this time around escalation could be potentially more dangerous for oil prices. The first one is that the IEA countries have already used 400 million barrels of SPR. So those barrels are already in the market. That means that we're less protected right now. There's less scope for further releases of SPRs. Let's not forget that US SPRs are at the lowest levels since 1983. So we're a little bit less protected than where we were back in March. That's one element. The second element, as you correctly mentioned, is that back in March, we didn't have any action from the Houthis. Now there is the actual threat and attacks in the Red Sea that could limit Saudi export capacity. And finally, Russia. Let's not forget that drone attacks, Ukrainian drone attacks on the Russian infrastructure are having an important impact on Russian crude exports. So if I combine those three elements, that means really that this situation could be more inflationary for oil prices.
And Jorge, at the first breakthrough, or one of the first breakthroughs that we saw about 3 weeks ago or so, big banks were coming out and saying we might actually see an oversupply glut in the oil market by the end of this year. Do you think that the prospects of that are still very much prevalent with everything that's going on?
I think very much depends on what happens with negotiations. If there is a deal and traffic through the Strait of Hormuz recovers, there's no attacks in the Red Sea by the Houthis, we're likely to see an oversupply market. Let's not forget that we have shale, U.S. shale reacting to higher prices. We also have the UAE, who has left OPEC, that could rapidly ramp up production. So we're likely to see an oversupply market as soon as the situation in the Middle East normalizes.
And just one more thing, when it comes to those shipping routes that Saudi has been using, the Strait of Hormuz, obviously a fifth of the world's energy goes through there. Those are all under risk right now. What other realistic shipping routes can those countries in the GCC go through if we continue to see this escalation in the region?
In the short term, very limited options to bypass the Strait of Hormuz. We have essentially two important bypassing options, which is the east-west pipeline from Saudi Arabia going to Yanbu. But the problem now there is that part of the south exports going through Bab el-Mandeb are under attack. And we also have the UAE, the Fujairah pipeline. Apart from that, there is very, very limited options in the short term to try to bypass the Strait of Hormuz. That's why it's key to understand and to follow the situation in the Middle East, in the Strait of Hormuz. That is key to understand how the market prices will react and whether we're going to have an oversupply or not in the coming months.
All right, Jorge, we're going to have to leave it there, but thank you for your time. Jorge León, Geopolitical Analysis Head at Rystad Energy. Now, coming up, the Democratic Republic of Congo's Ebola outbreak is poised to become the second largest on record within days. We'll have the latest on the epidemic next. This is Bloomberg. The Ebola outbreak in the Democratic Republic of Congo is poised to become the second largest on record within days, after more than 850 new confirmed infections were reported over the past week. For more on this story, let's bring in Jennifer Zapasajja, Bloomberg's chief Africa correspondent in Johannesburg for us. Jen, we're seeing a spike in cases over the weekend. What can you tell us about what is happening there when it comes to the Ebola outbreak?
Yeah, Abir, we are seeing this recent outbreak spreading faster than we've seen from previous outbreaks. By some accounts, it's spreading almost 3 times as fast as the Ebola outbreak in 2014 to 2016. Now, what we've seen over the past 2 weeks is that we've seen the death toll nearly double right now. The count looks like the case count is up to just about 3,200 people. That was on Saturday, with 856 new infections reported over the past few days. And the death toll has nearly doubled in the last 2 weeks now to just over 1,400 people. And so what we're hearing from officials on the ground is that surely this is, of course, highlighting the scale of the epidemic and, of course, the severity for many people. But, of course, it's also pointing out that we have been able to track infections more clearly. But still, there are quite a lot of challenges on the ground, which we've been hearing. Containment efforts are still difficult. We've reported on the fact that this area is still very porous with people going back and forth through the borders quite often. There's artisanal mining that has become a difficulty, and also cross-border trade. And so at least trying to contain this has become difficult for people on the ground. And so while perhaps we are seeing more infections being able to be counted, it is still quite severe, and especially as we're seeing these numbers continue to go up, especially considering there is no vaccine at this point in time.
All right, Bloomberg's chief Africa correspondent, Jennifer Zapasajja, keeping an eye out on the unfortunate situation there. Now, we also are expecting a busy week ahead for European banks that are set to deliver second quarter earnings results. Barclays will be a key focus as investors look to whether the UK lender will benefit from frenzied equities trading that boosted Wall Street banks. For more on everything that is happening there, now bringing in Bloomberg's Charlie Wells in London. Charlie, good to have you on this morning. What more can we expect from Barclays' results later today and the wider sphere of the lenders there?
Well, the environment has been pretty good for a lot of these large lenders across the globe that we've been seeing as these earnings have been coming out. And really, over that past quarter, it's that global volatility that has really been boosting a lot of these trading desks across the world, basically giving a lot of momentum to some of these firms which have really been able to kind of benefit from the volatility. We're expecting that for Barclays as well. Their trading desk is expected to bring in north of $3.3 billion in that quarter. Now, that's a great number, and we're going to want to watch when these results drop, but compare that to some of these U.S. lenders, right? So JP Morgan, Goldman Sachs, their trading desks brought in some $12 billion each. So again, the comparisons there are really tough. Another factor that's really kind of bringing in a boost for a lot of these banks, and could for Barclays as well, is the rate environment, right? The sort of higher for longer environment that actually could help Barclays in some of its key profitability targets. So those two factors, volatility and rates, really could help Barclays today.
All right, Bloomberg's Charlie Wells keeping on top of those earnings that we're expecting later today. Now, for a look at where equity benchmarks are sitting before we head towards the end of our show, we're taking a look at S&P futures, 0.3 lower, NASDAQ 100 futures about 0.8 lower, Dow Jones futures not doing much, and Euro Stoxx 50 futures also not doing much this morning. Now, we're keeping an eye on the AI story. We're keeping an eye on the 4 Mag 7 companies that are set to report, the FOMC meeting that is happening on Wednesday. We're also expecting other central bank decisions, including the BOE and the BOJ this week as well, though no changes are expected in terms of policy or rates there. And then we're also keeping an eye on oil prices that are dropping this morning because of that de-escalation in the Middle East, and President Trump saying that a deal with Iran is still very much possible. But that is it for Horizons Middle East and Africa today. Stick around with us for Daybreak Europe. This is Bloomberg.